Hello everyone and welcome back to Sudden Wealth. I hope you guys are doing very well. If you do enjoy the content, please consider dropping that like and subscribe. As you guys know, actually I was not supposed to make a video today since I made one yesterday, but I think it would be important to cover a few things. So obviously everyone yesterday saw what happened between Trump and Musk. Things have seemed to have cooled down. Some things have been retracted. I get the feeling that in due time, some sort of peaceful coexistence will happen. That's my feeling. Maybe I'm completely wrong. Maybe it's just going to completely escalate and become a civil war within the country. I don't think so. But who am I to to predict the behavior of those two gentlemen? One of them is already hard to predict, let alone two. Now, the reason why I'm making this video is because, in case you haven't noticed, the stock market is pretty much very close to new all-time highs. And the S&P closed above 6,000, around 6,000, but it's an important psychological weekly close. However, and this is why I made the video today, I've been saying, at the end of the day, what matters is liquidity, is the currency debasement. More currency is being created. That's how you see it in liquidity. Actually, the US liquidity has just hit all-time highs. So people think that liquidity is purely driven by the short end of the curve by the Fed. And I've been saying for multiple years that no. Yields, dollar, oil prices, deficit spending, and also some mechanisms that the Fed uses to make some auctions look better than they actually are in terms of bonds. All of this contribute to liquidity. And global liquidity increasing dramatically also is important for the US stock market. You see, what matters is the currency units chasing a fixed number of financial assets. And as long as the liquidity is going up, are we better today than we were a year ago? I don't think so. Things are escalating in Europe. There's a lot of uncertainty in the Middle East, particularly with Iran. Tariffs are present. Job market is weakening. Germany just hit all-time highs in terms of bankruptcies of corporates. What else? Elon Musk and Trump are fighting. The tax bill is expected to make things worse. Bonds are selling off. So you have a lot of things that you can argue, and quite rightly so, that things are worse than last year. Yet, here we are well above last year prices. Why? Because the money supply increased. I know it's not sexy. I know it's not, oh my God, look at this connection between the blood moon and this tree over here in the middle of the lake in Slovenia. See, this is the key. Like, I know it's not enticing. It's just you have assets denominated in currencies. Meaning, imagine a simple dividing equation in your basic math classes, right? You have one divided by the other. If the one you're dividing by keeps losing value, the one on top goes up in value without doing anything. That's exactly what's happening right now. And the reason I'm making this video is so you can see in real time. There's no reason from a rational perspective for the stocks to be here. But I told you, as long as the currency continues to get debased, the stock market over an extended period of time will keep on going up because it's priced in the dollar and priced in euros and priced in yuans and priced in yens and priced in whatever. As long as it's priced in currencies that keep getting inflated, then your assets over an extended period of time will keep on going up, in my view. Of course, this is just my opinion. The reason I'm making this video is so you can, because I talk about these things subjectively and with examples from history. But it's important to flag to you when you can see it in real time, because that part is those opportunities not always appear. So that's one thing that I wanted to flag to you. Then, there seems that the talks with India are going actually, that one seems to be going actually well. I wouldn't be surprised if we do see a deal coming next week with India or the week after. And they're also going to meet with China in London on Monday. And you can see that China is already starting to release some critical minerals for the top 3 automakers in the US. So all of these are positive signs towards some sort of solving the situation. So the trade embargoes and all of this kind of stuff. Now, again, we are at the point in which repaying debts, cutting spending, balancing the budget no longer cuts it. You cannot solve the situation that the US is in with that anymore. We've passed the barrier of when we could do it. Now, does that mean that, then we should just go, deficit of 10 trillion? No, that's not what I'm saying. What I'm saying is it's very hard to do any meaningful repayments or anything like that for one simple reason. If you do that, you suck liquidity out of the system. So the global liquidity that I was talking about, the particularly the US one, that goes up with assets, right? That starts to come down. Now, what happens to asset prices if you do that? Asset prices also come down. What are assets used? Quite a bit. For collateral for debt. Okay, so debts, if the collateral starts to get poorer, debts start to come down. Who does that affect? Well, initially the individuals. They default on the loans, it's their problem. Until you have enough defaults that it becomes a bank problem. And remember, as the bank is failing, and your deposit, and everybody starts to try to take their money out of the banks, they're going to find out quickly that there's not enough money for everyone. And this time you cannot print it. You have to let it happen. See the point? This is the place where we are today. Okay, so what is the solution? We all can identify the problem. You see the problem. So you see, what's the problem? We keep on printing money. We keep on increasing liquidity. We keep on going further into debt. What does that do? Asset prices go up. Okay, who owns the assets? Very wealthy people. So the wealth gap between rich and poor goes like this. It's not the fault of the rich. Like when people go against the rich, it really bothers me because it's not their fault. They just own assets. They have a lot of money. They understand. My money loses value every year. I need to buy stuff. I buy stuff. These mother effers keep on printing and spending money. My assets go up in price. Unfortunately for Main Street, nothing happens for them because very little goes into salaries and stuff like that. And they don't own assets. So they start struggling. And as they start struggling, they see a few people with a lot of wealth. And they start to think that those guys must be doing something to me to make me lose. That's the problem. While in fact, no. If you want to see who's screwing you, it's been the governments and the central banks for many, many years. But this is why also the politics, all the rhetoric around politics, all about division. Division by race, division by gender, division by sexual preference, division by eating habits. Division is always division in order to keep you occupied with imaginary enemies so you don't actually learn about what's happening to you. Now, let's go to what I think can be the saving grace, which is crypto, in my view. It's my opinion. I'm entitled to it. If you disagree, insult me, destroy me, it's all fine. Bitcoin is now close to 105K, Ethereum is close to 2,500. So basically recovered almost all the losses of yesterday, or recovered a big portion of it. There's so much PTSD in the cycle that Bitcoin makes a new all-time high at 112. It sells off to 108. Double top cycle is finished immediately. Like immediately gets bearish as soon as we sell anything above 3%. It's crazy. But that tells me, in my view, that we're going to have a massive run at some point. Maybe starting very soon. I think what's going to happen is, I think we're going to break out. Probably Bitcoin will go fairly quickly to 125K or something like that. And people start trying to predict the tops. And the thing is going to keep on running. And it's on running, people get mad. Because they've been selling, thinking that the whole thing's about to implode, and they really don't want to do what they've done in 2021. So they start getting angry because the whole thing keeps on going up. And then they eventually come back at the end with leverage to compensate for what they lost, kind of revenge buying or rage buying at the top, most likely, and then they get completely annihilated. That's my feeling. Now, Bitcoin follows liquidity very well, but Ethereum and the altcoins follow a lot also the business cycle. So we need to start to see the business cycle doing better for those alts to really come in. You need to have people to believe that things are great in order to be willing to take on the risk. Yes, even yesterday, I think 0 Ethereum was sold in the ETFs. Even yesterday, when Ethereum dropped so much. I get the feeling that today probably quite a bit has been bought. So even the institutions will help on the Ethereum front. But to get really that mojo, that juice, that altcoin, the Bitcoin dominance falling from 65% to low 40s, you really need more money in the pocket of individuals. You really need some confidence in the market. You need sustained periods of low inflation. Probably the fact that the Fed cut rate will be less relevant. So when the Fed cuts rates, it will be less relevant from a actual rate cut perspective. So I don't think the 25 bips or the 50 bips are going to make a big difference. I think it's the message to the market that the Fed is now confident that inflation is under control and that they will keep on easing to basically catch up with Europe, because Europe just cut rates again to 2%, right? So basically to catch up to Europe, to that inflation is really contained now, and that they can really start doing systematic cuts. That message of positivity will give hopes to the retail market. Why? Because I don't think you need the Fed cutting to have a massive bull run. But if retail thinks so, then you're not going to see them here until they cut. And I think they will need to cut. Look, Powell hates Trump. So the only way he's going to cut is when inflation is like 1.7, 1.8%. And then you get, jobless claims are going up. Inflation, there's no inflation anymore virtually. What the F are you doing? Why were you cutting in September and October, trying to get the old Kamala elected, right? And you're not cutting now. And then it's going to get to a point where it's going to be really difficult for the Fed to explain itself. So I do see the rate cuts potentially. If you do have a very good CPI number, maybe June, but I don't think so. To be honest, I don't think June. In my view, I don't see it. I get the feeling more towards September. If I had to guess, we'll see. But with that, guys, I just wanted to give you this quick live example of a situation in which, you can really see that at the end of the day, if liquidity is in the system and we are hitting new all-time highs in global M2, if that happens, then you really see the effects in the stocks, even if the narratives around you are actually worse than they were a few weeks ago. Oh, by the way, final thing I wanted to say. Learn to distinguish narrative versus fact, right? Narrative. Everyone is ditching the US, particularly US treasuries. Everybody is ditching them because they don't trust the US. This is the narrative. Okay, then explain to me why the foreign holding of treasuries hit a all-time high late March of 2025. April and May data is still not available, but explain that one to me. So foreign holdings of treasuries hit all-time highs this year already. Okay. Oh, yeah, but they're selling stocks. They're probably selling stocks. Oh, the foreign holdings of US stocks just hit a new all-time high in May of 2025. 20% of all the US stock market is now held by foreigners. For you to have an idea, it was 8% in the year 2000. This is the big de-dollarization, right? 8 to 20%. And by the way, the stock market grew quite a lot between that. So actually in absolute terms, it's even bigger. So this is important because nobody will ever tell you this. There's no channel that will tell you, hey guys, have you noticed that the foreign holdings of the US, or a foreign holding of US stocks, meaning US stocks held by foreigners has hit a new all-time high in May 2025. So basically a few weeks ago. Did you know that? No, nobody will tell you. Then they seem to think, oh, the US is such in a bad shape, the US is such in a bad shape. Did you know that Germany is having more corporate bankruptcies than in the global financial crisis today, in 2025? Did you know that? No, you don't, because you don't get information, you get propaganda. If you want some information, you need to dig up for it, and that's your only shot. With that, thank you very much, guys. Enjoy the weekend. I hope you have very good weather wherever you are. Don't forget to like and subscribe, and I'll catch you in the next one.